So we're good.
Good afternoon. I call to order the December 2025 meeting of the Audit and Compliance Committee of the University of Minnesota Board of Regents. Good afternoon, everyone. Thank you to everyone joining us here in the West Committee Room. While today's meeting is not being live streamed, the recording will be uploaded and archived to the board's YouTube channel after today's meeting. I would like to start by welcoming our student representatives today, Danielle Arrer from the Rochester campus and Erin Maher from the Morris campus. I really hope I pronounced those correctly, and if I didn't, please feel free to correct me. They will both be joining us virtually. Danielle is here, so we will proceed. The first item of business this afternoon is discussion of the university's external auditor report and fiscal year 2025 financial statement audit. Here to provide the update are Controller Molly Viola and from the university's appointed independent expert external auditor, Clifton Larson Allen LLP, Principal Jean Bouchon, Principal Daniel Persad, and Manager Michael Anderson. Controller Viola, would you like to start?
Good afternoon, Chair Verhalen and members of the committee. I'm pleased to be here this afternoon with our audit team from Clifton Larson Allen. They're going to provide an overview and the summary of the results of the university's audit for the fiscal year 25 annual statement. With that, I'll turn it over to our principal, Jean Bouchon.
Hello, Chair Verhalen and the rest of the community. Thank you so much for having us this afternoon. As Molly mentioned, our goal today is to brief you on the results of the FY25 external audit process. My name again is Jean Bouchon. I sit in our Denver, Colorado office, but more importantly, I lead CLA's efforts as it relates to public higher education institutions. And it's certainly a pleasure to serve the University of Minnesota. Today, we're going to highlight a couple of key items as we're required to communicate these elements to governance. First of all, we want to remind everybody what the external audit is, the responsibilities of each party. As governance, you have a responsibility in this process, as does management, as the CLA as your external auditors. We'll then talk a little bit about unique items. We did have some new standards that management had to implement during the year, so we'll highlight those, talk a little bit about our risk assessment process, but really we want to spend our time today talking about the results of the audit. At the very end, our colleague Daniel, he'll be wrapping up and talking a little bit about required communications with governance. So with that, we will get started. We always like to start these conversations as it relates to, what the external audit process really is and what our job is as your external auditors. And that role is to be able to tell the readers of your financial statements, can they rely on the information that the university is publishing? Are those numbers, are those footnotes that they're disclosing, are they free from what we refer to as material misstatement? Are they free from material misstatement, whether it's due to fraud, material misstatement, whether it's due to error or due to non-compliance? And so we build a risk-based type of audit to try to identify those different types of misstatement. And my colleague Mike will walk you through what that risk-based audit looks like in just a second. But it's important to understand we all have responsibilities in this process. Your responsibility is that of oversight of this process. Management's responsibility is the compilation of those financial statements that are free from that material misstatement. And then we come in and we build that risk-based audit to be able to tell the reader if they're free from that material misstatement. Now, keep in mind, never look at your external audit process as part of your internal control structure. Okay, management is responsible for building that internal control structure to prevent and detect the material misstatement due to fraud, error, or non-compliance. Our job as it relates to your external auditor's job as it relates to internal controls is we do test certain key controls, not all controls. We test certain what we call key controls, and we are required to report to you if during the course of that testing we identify any significant deficiencies or material weaknesses. Our opinion, though, is not over internal controls. Our opinion is over the footnotes, the financial statements, and whether those are materially correct. All right, with that, I'm going to turn it over to my colleague, Mike Anderson, to walk us through a little bit about that risk assessment process.
Okay. Chair Verhalen, members of the committee, I'm Mike Anderson. I'm the manager on the university's audit engagement. In that role, I complete the detailed review of all the procedures completed by our team, as well as serve as a primary source of communication between management and the CLA team. As my colleague Jean had mentioned, we do a risk-based audit. And what that really means is we don't provide absolute assurance. We don't audit to the penny or to the dollar because that would be cost prohibitive, also very administratively burdensome. So as a result of a risk-based audit approach, we focus our time and energies on those areas most susceptible to error, whether intentional or by mistake, or manipulation during that financial statement close and reporting process. So we have two what we call presumptive risks as part of our audit. And if you were to look at any of your peers in the Big Ten, these are going to be the same risks that they would have as well. The first being revenue recognition, meaning how does the entity continue to be viable? How do you continue to recognize those revenues so you can fulfill the mission of the university? And then the second is management override of the internal control structure in place. And what that really means is where is there risk of circumvention of the controls in place? Are there areas where one individual would have the opportunity or incentive to adjust figures during the financial statement close and reporting process? So our audit develops procedures to identify potential errors in these areas. We test detailed transactions in the revenue recognition transaction cycle, and we also test manual adjustments within the financial statement and close reporting process to address these two risks. Now, with the university having a significant alternative investment portfolio comprising such a large part of that balance sheet, both quantitatively and qualitatively, we have identified alternative investments as another risky area. So we developed procedures to address, are those investments appropriately valued and represented on the university's financial statements? So ultimately, we start with that high-level risk assessment, which takes into consideration the university's internal control structure. We identify those risks and then develop that audit plan and those procedures to address those risks. Are there any questions on the risk-based approach or how we carry out our audit?
I apologize, the slides won't advance.
That's okay.
For what it's worth, I have a paper copy here that the
Yeah.
team can work off, but we have IT help.
We also have our board books for the most
Okay.
part.
No. So if there aren't any questions, my colleague Jean had mentioned that there were two accounting standards that went into effect this year, GASB 101 and GASB 102. We got the slides working again. GASB 101 specifically relates to what entities reporting under governmental accounting standards have to consider when evaluating what is our liability for compensated absence. So when I say compensated absence, think vacation leave, sick leave that has been earned by June 30, but not yet used. This new standard provide a refined definition and some additional considerations when determining what is that liability as of June 30. The university's management evaluated, adopted the standard, and the actual liability did not change. But what you will see is some refined, modified language in the footnotes to adhere to the new standards and the new terminology used in that standard. And the second accounting standard that went into effect is GASB 102, which specifically discusses additional disclosures required when an entity has either concentrations or constraints. So we have the definitions on the slides about what a concentration is or what a constraint is. What I'll highlight here is the presence of a concentration or a constraint isn't the deciding factor of whether a disclosure is needed. There really needs to be some event that makes it probable that within 12 months there could be negative impact to the entity. So this is going to be a standard that's continually evaluated, monitored by management, but for the current year, there were no disclosures related to concentrations or constraints. So with that, I would like to pass the presentation to my colleague Daniel to speak about the results of our audit.
Good afternoon, Chair Verheugen and members of the committee. My name is Darren Prasad. I'm also principal on engagement This is Gene as it relates to the opining on the financial statements. I would say this slide is probably the most important slide of the day since it talks about the results of our audit and why we were engaged by the university. And I would say it's probably the best slide to present on, so I'm glad my team allowed me to present on this one. So in terms of the audit opinion, as Jean mentioned, it is our responsibility to express an opinion on whether or not the financial statements are free from any material misstatements. Based on our audit, we did issue an unmodified or clean opinion. This year, however, you'll notice that there is an emphasis of a matter, and this relates more to the university's foundation, for which there were some reclasses to the prior financial statements, did not have any impact on net assets. However, one thing to note is that this did not have any impact on the university's financial statements. Now, the best part of the presentation, as it relates to the financial statements, I'm happy to report that there were no audit adjustments. And as Jean mentioned, as we go through our procedures, if there was any findings, we're required to report it. And I'm pleased to report that we did not identify any material weaknesses or significant deficiencies relating to the financial statements. So overall, a great audit. In terms of the next slide here, it touches on required governance communications. What this is during our planning procedures, as Mike mentioned, is we do talk to a member of the committee, we talk to management in terms of our audit plan. And if there were any changes in scope, we're required to report it to you. We did not have any change in our scope. Mike did mention the two standards that were implemented in the current year. And one thing to note is that there were two, as it relates to your significant accounting policies, within your financial statements, those are located in note 1 of your financials. The bottom left there, typically when you present certain items, when you see no, you think it's negative. In this case, the no, as it relates on this slide, is positive in that, management was pretty good to work with. And if we had any questions, they made sure that it provided every information to us so that we can be ready to present our audit opinion to governance today. In terms of the financial statements, there are some estimates, whether it be valuation of alt investments, as Mike mentioned, and there are other estimates within your financial statements. And our responsibility as auditors is to review those estimates, which is based on management's judgment, to make sure we do evaluate last year's, we evaluate this year's estimate, and based on our audit, we think that the estimates are reasonable within your financial statements, and we did not note any bias by management as it relates to those estimates. And then in terms of some other items relating to the governance communication, as I mentioned, no material audit adjustments, no past adjustments. And we did issue our audit early November, so we got the necessary representations from audit management to make sure that we can issue our audit report. This slide, just want to touch base on here. We do support the university in many ways. One thing to note, as you think of auditors, sometimes we have independence where we can do certain things. So anything that's on here, we did go through our due diligence, and independence is not impaired, but we do appreciate supporting the university as it relates to whether it be recruiting on campus, providing some trainings as it relates to standards, and we also participate in some of the conferences and industry participation that the university is part of. So just want to take some time to acknowledge our support to the university, and we'll be happy to continue to support the university in future years. And then the next slide just touches a bit in terms of we're complete with our presentation, but I just want to take some time to thank management, Molly, Mike, and their team as it relates to their support throughout the entire audit process. As auditors, we can get an audit completed no matter what. But if we don't have support from management to provide the necessary questions that we have and the necessary support, we will not be able to issue an audit opinion. So just want to take some time to management for their preparedness and support throughout the entire audit process. So with that, Chair Verheulen, that's our presentation, and we'll open it up for any questions.
Yeah, thank you very much. Appreciate it. While folks think about their questions, one that I just wanted to, most people don't live in the auditing world. And so how often is it that there are new GASB standards adopted? And is it usually triggered by some sort of hiccup in the system? So there's a determination generally across the industry that something else should be tested, or is it driven from a different bottom-up approach?
Chair Verheulen and the rest of the audit committee, I would love to answer that question. Great question. I would say it depends on the year. Of recent, years, though, it seems like we've had a lot of Gatsby standards. And I will acknowledge that does typically take a large lift by management to implement these. Oftentimes, they're initiated by either inconsistencies within a university to a university. So for example, the example for compensated absences, what the committee noted was that there wasn't consistency of how sick leave was being recorded. And so they implemented the new GASB. A few years ago, the big one was leases. Another one that was recent was subscription-based IT arrangements. If you've heard of Workday, there were just inconsistencies within universities or governments across the nation. And so the Standards Board will hear about these inconsistencies and adopt new standards. I will say in our February meeting, we will be presenting some new GASBs that will be implemented in FY '26. Does that answer your question?
It does. And just for clarification, when you said the committee, you're referring to the Governmental
Accounting Standards Board. Sorry, I should have said board. Thank you.
Just
Thank
wanted
you
to
for
be
that.
clear.
Yeah, not you guys. Yeah.
Nothing internal. It is coming
Right.
from a separate.
100%, yeah. And the purpose of GASB is to make sure there is consistency. So when you pick up Wisconsin or Maryland and you look at those financial statements, there's a set of standards that everybody's following so that you can have that consistent reporting.
Thank you very much.
Of course.
Are there any other questions from committee members? Well, Controller Viola, thank you to you and your whole team. Thank you to the Clifton Larson Allen team. We really appreciate it. And any comments from you? Auditor Ellsworth?
Chair Verhalen, I would just like to reemphasize how much work goes into this. Again, this is a very short presentation. This is months and months of work by management and the audit team. So, and these are fantastic results. So don't want to let that go by without at least calling that out. So thank you.
Appreciate that. Thank you.
Really appreciate it. Thank you.
Thank you.
Our second item is the annual institutional compliance report and the institutional conflict of interest report. I would like to note that this is a flipped presentation, so the full video can be found in today's docket materials. But Interim Chief Compliance Officer John Gooden is here to answer any questions we have. Chief Auditor Balswick, would you like to frame up our conversation before we get started?
Yeah, thank you, Chair Verhalen, members of the committee. I just want to remind the committee that today's materials is really focused on the board required reports from John Gooden's office. So the institutional compliance report and the institutional conflict of interest report. There's an agenda item in April for the committee to really talk about the broader compliance landscape at the university, how those compliance functions work together, the governance, et cetera. So I think that would be a robust conversation that'll give us some perspective on the future, as well as maybe a little bit more holistic view, while this is the more narrow report. Just want to make sure that was clear.
Great. And any initial comments from you?
Well, good afternoon, Chair Verhalen and committee members. The presentation did cover our compliance program, the annual misconduct reporting, and also the requirements from the institutional conflict policy. So I'm pleased to address any questions you might have on that material.
Yeah, I found it a very helpful presentation, especially being a flipped presentation, because I was able to listen to it a couple times. Took me a couple times to pick it all up, so really appreciate that. Interim Chief Compliance Officer, are there any questions, comments, discussion? Sorry to make you come all the way up here.
Not an
Really
issue.
appreciate
We
it.
appreciate your time tremendously and all the efforts of the flip presentation. Thank you.
Yes, because we know that's not just straightforward. It does take time, so thank you. All right. Our final item is to review and act on a resolution to conduct a non-public meeting of the Audit and Compliance Committee so the committee may discuss data management and information technology security. Ms. Marcassani, would you please read the resolution that's included in the board materials?
Chair Verhalen, the resolution is Regents of the University of Minnesota, resolution to conduct non-public meeting of the Audit and Compliance Committee to discuss information technology security. Be it resolved that in accordance with Minnesota Statute 13D.05, Subdivision 3D, a non-public meeting of the Audit and Compliance Committee be held on Thursday, December 11th, 2025, in the West Committee Room, 600 McNamara Alumni Center, for the purpose of discussing information technology security.
Is there a motion to approve the resolution?
So moved.
Is there a second? Any discussion on the resolution and the motion? All those in favor, please say aye.
Aye.
All opposed, say no. All right, the resolution is approved. We're now going to take a short recess to end the recording and allow those in the West Committee room to leave. Thank you, everyone. We will stand in recess until 2:52.